Good morning. My name is Naneji Okokwajuman. I welcome you to the head office of Blackstar. This is the 2023 edition of the Blackstar Investor Webinar Series, and today is day 4, virtually the last day. It's a holiday edition, so I think a lot of people are still moving in from the waiting room. So we will beg of you for another 10 minutes as we've been doing throughout the week. Then we'll come back at exactly 10 past 10. So please stay tight and be back at 10. Good morning once again. My name is Naneji Okoko-Ajuman. Welcome to the head office of Blackstar. This is the Blackstar Investor Webinar Series, the 2023 edition, and today is day 4 and the last day. This is a forum that we have a lot of stakeholder conversation on things bordering our markets, our business, and by extension, our economy. Throughout this week, we've had the securities industry and pension guys coming through on day 1, and we also had the banking sector on Wednesday, and yesterday was dedicated to the insurance guys, and it was great with an international appearance from the MD of the Jamaican Stock Exchange, who shared their experience of debt restructuring, and I'm very sure that a lot of us picked 1 or 2 key things from it. Today is the last day, and we are crowning it with the fintech and SMEs. It goes without saying that after every decline in an economy, there has to be a revolution. A greater majority of people believe that the next revolution for Ghana may come through fintech. And we are not far from that. In our Blackstar, we have a lot of belief in technology, and we are dedicating this day to fintechs and SMEs. Today, too, we have 3 key speakers, and it will be led by Engineer Kenneth Ashigbe, who is the lead of Ghana Telecom's Chamber. The moderators will give his profile, but Ken is a known person in Ghana. He's handled Telecom's Chamber, and he's also handled a lot of media organizations, and he was the former MD of Graphic as well. The other speaker for the day will also be Mr. Derek Ndazi. Derek Ndazi is one of the key success stories of fintech evolution in Ghana. Derek, together with his colleagues, set up Dreamover, which today is one of the leading technology firms in Ghana. Not to make fun of them, they set it up in a garage at Laboni. And I know this story very well, and I always get excited about it because of where Dreamover is. Derek is currently an IT consultant doing a whole lot of wonderful things. So Derek also come on, and we'll have an in-house presentation from Joe Apia, who will take us through some interesting things about fundraising for fintechs and startups. Our moderators for the day will be our very own Louisa Nelson and AJ Boateng, who is the CIO of Blackstar. So we would like to take off by welcoming Ken. After Ken, Na and AJ will take over. So Ken, good morning, happy holidays. If you can hear me, welcome.
Thank you very much. And I'm glad to be here. The interesting thing is myself and Deridine, we have something in common. We went to the college, the Oli College in Ghana, St. Augustine's College. So I'm glad to be here with him. Can you hear me?
Yeah, I can hear
right.
You can.
I'm very happy to be on the...
I can hear you, and I heard the attempt to impose Ogasco on us, but we are fine.
Okay, right. So thank you very much, and well, welcome to this esteemed gathering. I think the topic that I've been given to deal with, bridging the stakeholder gap for a resilient fintech ecosystem, and I've added post the Ghana's domestic exchange program, I'm taking a leave from the general topic that we're discussing today. And I completely agree with you that after when the cycle hits the bottom, to really be able to bounce up, you need not an evolution, but a revolution. And I believe that the fintech and the technology space generally would be the the next thing to really move us to that particular space. And so as we look at that, in the next 15 minutes, I intend to share a few thoughts on the gaps that exist, that we've identified in the fintech ecosystem. And then we'll look at the regulatory frameworks that are required to ensure that we get that revolution or the bounce back that we're talking about. And then we'll examine how bridging the gap would enhance investor and market confidence in the space. So the story, I think already, and you give the great example of what Derideen and co have done. It's a good story to tell, and it would have been great if you had more time to look at the global picture, but because we don't, I would try and focus on just our situation. And if you quickly look at where the trajectory is looking at, I believe even that Data Market Force would see that beyond 2025, 2026, the jumps would be greater than what we see on our screens are. And the conversation in Ghana, if you look at the African example, for example, if you look at what BCC says, jumping from 5 to 6, in terms of billion, 65 billion, a 13-fold jump. Really, Africa is going to push a lot of that. And I believe that today, as we speak about it, what we want to do is, what can we do to ensure that Ghana has a disproportionate share of this, and how do we also contribute to ensuring that we can really push this 65 billion further up? And I know we're talking about fintechs, but there are other technological spaces that we also need to be paying attention to as we go along. And so if you look at the ecosystem, there are several players that are in the ecosystem that need to all come on board: academia, entrepreneurs, the technology firms, the traditional. The consumer is a critical group that we need to bring onto the table, especially in this technology driven world that we are in. The consumer today does not want to be left out, and we need to be bringing them into the discussion, and webinars like this help to do that. The corporate, government, regulators, IPO investors, VC investors, angel investors, all of these also have great roles to play. And really, we are going to ensure that we deliver the change that we want to see. And it is really important that if you want to bridge the gap, we need to bring all of these people onto the table, taking into consideration the VUCA environment that we're finding, where change is the only constant thing. It also would mean that even regulators, even policymakers would have to be agile in the way they do their things. As we talk about all of this, it's important to also note that Ghana is a shining example. There are some important things that are happening in Ghana, and you gave the example of what Derideen and his cohorts have done. And and for me, the interesting thing is that a lot of these things have happened without really support from government. This is one of the sectors that have grown on the back of players themselves and pushing at the forefront, and the growth that have happened in places like Kenya and Ghana, South Africa, all of that really pushing it. There is a lot more that we can do to be able to ensure that these revenue potentials that have been put up, we are able to ensure that we go beyond that, because the potential is great, and I pretty believe that we can really do it. So now let's focus on the gaps. I talked about some of the things that we needed to look at. Unfortunately, fortunately for us, we've had a regulator that had really pushed, and so Bank of Ghana, as the primary regulator for the financial space, have come to the table. They've set up the FinTech and Innovation Office. Now we have a regulatory sandbox that, there's some work that is going on in there. But it is important to also note that it is not only it's not only the financial regulator, there are other regulators that come into the space. So you have, other policymakers, Ministry of Finance, GRA, you have the NCA, you have the Cybersecurity Authority. All of these regulators come onto the space. How collaborative have they been in their regulation? Those are questions that you really would want to ask. You have government pushing the digital agenda, and then you have the same government come up with e-levy, for example, that then comes to put a dampener on, the way things are going. So it is important that we can bring all stakeholders around the table to see how we are able to push it, because it's an ecosystem thing. And for these things to work, all of us within the chain need to be playing our roles. So if you look at the issues of the gap, for example, you have the information gap. That is one of the major gaps that you have to deal with amongst existing stakeholders, leading to inconsistency in understanding and implementation of regulations. And again, that's why I give the example of, GRA, for example, the Ministry of Finance, for example. Then you have the vice president pushing the national digital agenda. Then, in another breath, you then have Ministry of Finance and GRA coming up with, the e-levy, and then, that inconsistency, policy disalignment then creates the challenges that you have. So it's really important that we bridge the information gap. Unfortunately for us, technology gives us an opportunity to be able to do that. There is also the need to bridge the gap between the banking, technology, communication sectors. The various sectors need to come on. Even for, if you take the telcos, for example, we need to be a lot more understanding of the fintech, the startups, to be able to ensure that we are really collaborating a lot better, than we have done. And so that is also another gap that we need to bridge. The startups and then the matured, technology companies as well. We need to ensure that that gap is also bridged. Then, there's also the gap that exists between the fintechs and the banks. If you go back again and you look at what the example of how mobile money started, and some of the banks really stood against it, but you see today, the banks are benefiting from it. All the float sits, with them, and they are able to do the intermediation, and they're also benefiting from it. So it is important that also, as the fintechs come into this space, the traditional banks understand them and know that it is about collaboration. How do we work together to ensure that we are able to deliver the next step? We are able to make sure that if you take the Findex report, that the about 30-something% that are still, not included, how do we come together, collaborate? It's not just about competition this time. The paradigm should be collaborating even with your competitors to find out how you win. Another gap that we find is that, the Ghanaian thing of wanting to do my own thing. And so you have the challenge of most of the fintechs not even collaborating, not finding ways in which they can come together, collaborate, consolidate their effort to be able to scale up. We are within the after period now. And, if you don't do that collaboration, if you are not careful, you would be eaten, because any fintechs in any other market can come into our space. So it's important that the fintechs themselves, also that gap that exists between them, they are able to learn how they themselves would be able to bridge that as well. Then the final gap is consumer education and awareness, bridging the gap between the consumer and the tech, those of us who are pushing it. And as I said earlier on, we need to find ways in which we bring the consumer also onto the table. Then you move on to the critical issues of regulation. And it is important that to really build a resilient fintech ecosystem, we need to improve our regulatory environment. We cannot continue to use 1G, regulation to want to regulate 5G, AI, and all of that. And it's important that for even Bank of Ghana as well, we cannot be using regulation that was made for the traditional banks, to want to regulate some of the space that we are currently in. So our regulators need to be very agile, and they need to really push the boundaries and ensure that, there's a lot more understanding of what is happening, that regulation this time is more about, and guardrails more than just stopping things, because you will find out that technology would always lead regulation. And if you don't try and allow it, enable it, examples of the cybersecurity authorities, collaborative regulation, Bank of Ghana's collaborative regulation, and then you find out that when Bank of Ghana sets up the fintech office, though as regulators, they add innovation to that. So now we need to get regulators, live with that paradox of wanting to enable, innovation, and wanting to ensure that their regulation would also push investment. And that's really going to be a very important thing to do. And it's important to say that, in Ghana, I think we really have done a good job with that, especially from the Bank of Ghana stage. If you look at all the policies and all the regulations that have come, even up to when the law came into place, there's been engagement with that. Just yesterday, there was a meeting between the technology chamber and the telecom chamber, with the regulator sitting down with the deputy governor himself sitting in the meeting, wanting to have issues, having responses, and being able to talk things. And that's what we need to do. We need to be able to bring other regulators also on board. It's important that regulators also adopt a proactive approach to addressing the information gap, addressing the changes that are happening, allowing things to be able to go on whilst they provide the guidance to make sure that there is safety, they make sure that the consumer is protected, they make sure that there's stability in the financial ecosystem. All of that have to be done while still wanting to push the innovation, making sure that the disruptions continue to go on. Once again, I'd like to say that we might enhance the collaboration between the banks, the telecom, the technology sectors, the fintechs, and all of that. Regulatory framework should facilitate partnerships, interoperability mechanisms that enable seamless financial transaction, reducing friction and enhancing customer experience. The collaboration will drive innovation, expand market reach, and promote financial inclusion. And again, as I say, the regulators themselves would have to also be nimble. Bridging the identified gaps in the first part of my presentation within the fintech ecosystem will certainly contribute significantly to rebuilding the investor and market confidence. And especially after our DDP, we really need that. We need to bring back the trust. Collaboration and effective communication among stakeholders provide assurance to investors that the sector is united in its commitment to growth and stability. But by prioritizing shared goals, stakeholders can create an environment that fosters innovation and attracts long-term investment. Clear and consistent regulatory frameworks inspire confidence among investors, ensuring that a level playing field is created while balancing the risks between management and innovation. When regulations are well-designed, transparent, and regularly updated to reflect technological advancement, investors gain confidence in the stability and the potential growth of the industry. So furthermore, as I close, bridging the gap in consumer education and awareness not only protects the consumer, but also creates and also enhances market confidence. Educated and empowered customers are more likely to engage with fintech services, driving demand and laying foundation for sustainable growth. In conclusion, the DDP in Ghana has highlighted the need to bridge stakeholder gaps in the fintech and overall ecosystem. Through collaborative, effective regulatory frameworks and consumer education, we can rebuild investor and market confidence. By fostering collaboration and clarity and transparency, we will create resilient ecosystem that drive innovation and contribute to the financial inclusion and paves the way for a sustainable ecosystem. And I believe that engagements like this that we're doing, we need to bring a lot more the consumers also onto the plate. And then as we all talk together, we'll be able to ensure that that 65 billion that is projected, Ghana is able to take its disproportionate share. Thank you very much.
Thank you very much, Dr. Ashove. What a wonderful introduction and a great way to end the weekend. As you were going through, there's so many things that you talk about and mention, which I feel is worth interrogating a little bit more further as it pertains to our side of the world. One of the things that and this is coming from experiences that we've had on our side of engaging with some of the startups in the fintech space. What sort of effort is being made to ensure that the larger telcos are sort of collaborating a little bit more with the startups to ensure that they create that enabling environment for them to be able to innovate on top of the infrastructure work that they've already built?
Well, so thank you very much. It's a very critical portion of what you say, because there's no way in which the telcos will be able to do some of the things that the startups would do, because you see, the telcos are not set up to be as nimble as the startups do. So in the past, you have the struggle where when some of these startups want to connect, even getting APIs and all of that become a difficulty, but as regulation comes in place, and then, with the data protection law coming in, with the cybersecurity also coming in, where now you are because the thing that most of the telcos will also want to do is that they want to protect themselves so that there are no legal suits to them when you offer these opportunities to these startups. And then you also want to make sure that there's a framework, there are standards in which you can get these connections to happen. You make sure that the guardrails are also in place. But the good thing is that the telcos themselves have realized the fact that without it, without this collaboration, we will not be able to reach the last mile. Without it, the revenues from voice is always already declining. Data itself, you really cannot see it. It's the added services, it's the new things that can happen, it's the solving of the problems that can happen. So the awareness has already been created for the telcos. And you find them that not only do they themselves, provide these openings, the fact that now these APIs are coming, but now they themselves are going out and courting. You find out they themselves are now going up and setting up boot camps where they are able to then recruit some of these startups. We're not only doing that, we've gone back to the extent that even for the chamber, we now are starting to teach coding, even at the primary level, because we believe that these are where the ideas would have to happen. And for us, it's about collaboration. Even amongst as competitors, you're finding that a lot more collaboration is also happening among them. So I think that it is an aha moment that the telcos, and I'm hoping that even now, because some of the fintechs are also now beginning to mature, and they themselves would also have to be open to collaborating with all of us. So it is the time we are in, it's the people who will win are those who will be able to find out how to collaborate with even their stark enemies, their stark competitors, to be able to come up with new products so that they can expand that 65 billion that, has been projected, that I think we can move to 130 billion.
So, thank you for that, Dr. Ashigwe. So the other question we have is how did the DDP impact the fintech environment? So we know that banks were affected, insurance companies, security industry, but how was fintech affected?
The interesting thing is that for the way we run our mobile money space, based on which a lot of the fintechs run, is that for every CD that you have sits in the banks. So once the banks are impacted, once investments are impacted, it also then, definitely would impact, the fintechs. And then another thing that also happened is that the DDP shook, the investor confidence. So who again, is going to bring his investment to you was a problem. But within all of that challenge, there are also opportunities. Because now people who had monies, who wanted to invest, were now looking at themselves and say, well, even government bonds that all of us back in business school were told were the risk-free are now becoming riskier. So that if you are a fintech and you are able to put together a good business case and able to, demonstrate a good return, then opportunities also came where investable funds now could move into the fintech space. So it was a double whammy. There was the negative side, but at the back of all of that, those who are smart found out that these were opportunities to also offer better, investment opportunities to people, and they were able to attract other investment. The only challenge was that it also came at when e-levy had come and had also muddied the space a bit. But definitely the DDP thing, and as it's still going, it still offers a lot more opportunities for fintechs to be able to startups to be able to come up with ideas, bankable ideas that can guarantee people better returns for investments.
Thank you very much for that answer, Dr. Achebe. We have some additional questions from some of the participants, and I think the question was partly addressed in your presentation, and that was in the light of what has happened in terms of DDP, investors' confidence and being all-time low and other things. Is there any sort of collaborative effort for the banking and the financial institutions from where you sit to sort of encourage more sort of lending to some of these fintechs? Because from where we sit, a lot of the challenges is often someone might have a really great idea, but the capital to support them in the early stages often becomes one of the core challenges. So the question really is, from where you sit, is there any collaborative effort to ensure that the banking and the other financial institutions really support the homegrown fintech companies?
Well, I think the opportunity, is available. I think that the time has come for the banks who, in the past, all their focus was investing in government bonds, investing in government treasuries, beginning to look, at other places, and these are opportunities for them. But beyond just the banks, the pension funds, for example, they are holding huge swathes of amount of money, and this is where regulation also comes in. It is important that the NPRA, for example, looks again as the investment, frameworks that they've given to these pension funds, where they are limited from where they can invest. They need to take off the hands of and allow these pension funds that have a lot more lazy capital, that have longer term, horizon for their investment, to be able to invest in some of these local, homegrown ideas, and not only just invest as debt, capital, but also as equity, get in there and be able to help them, to grow. And the time has come for even our stock exchanges and all of that to start looking at what frameworks we can put in place to enable, some of these small, startups, fledgling startups to be able to go. But I tell all of us, there's opportunity now for us to get in, because we have a lot of challenges. Our Greek sector is not working, productivity is low. We have the edutech opportunities in edutech, we have opportunity in agri-tech, health tech, all of these are available. And that, so this is where we now need to change our mindset and say that these are places where all of us can invest in. And so for yourselves, the time has come for you to be able to cut the larger populace, to say, can we all chip into a particular fund that these, fintechs and startups can come and go in, come and pick into, and then we'll be able to get, look at, we're talking about 13 times, the growth that is envisaged. So for us as customers, for us as individual investors, we also should want to play into that, so that when you have such growth happening, our investment can return that kind of growth for us. So I think the opportunity for the collaboration exists. And I think conversations like this that bring all of us together are good points to be able to bring us all together. We need regulation to back it. We need policy to also support it.
Thank you for that, Dr. Achebe. So we have one last question before we move to our next speaker, but we will plead with you to stay on the call because we have more questions. So one of our participants is asking how our university curriculum should be structured in order to encourage entrepreneurship in tech. What do you think about that?
Very, 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 very important question. It's really critical, not only for the university curriculum to be shaped to make them put entrepreneurship and technology in the same basket, but also start looking around at the challenges that, confront our people, because those are the golds that, those are the diamonds, that are available for them. Because once they start solving this problem using technology and within the framework of AFTA, they'll be able to scale them up. But there's another important thing that has to happen. Regulators and policymakers will now have to start going into the universities, so that if you take, for example, the Bank of Ghana's, licensing regimes for fintechs and all of that, it has to be taught right from first year, or I would dare say even from, SHS 3, because some of the ideas are coming as low as that. You don't want them coming up with ideas and then they come to hit a bottleneck and they don't know your regulations, they don't know your policies. So not only should a curriculum to be reframed, but you also need regulators getting into these spaces and teaching them these regulations, taking the ideas and letting that influence the regulations that they are also coming up with. Sorry.
Thank you. Thank you very much, Dr. Achibwe. We are getting a lot more questions for you, Doctor, but in the space of time, we would desperately encourage you to stay on the call, because it seems like your topic is of particular interest to a lot of the participants. To introduce our next speaker, my colleague Naya Louisa will introduce our next guest.
Great, thank you, AJ. So our next speaker is Mr. Derry Dindazi. He is a seasoned technology entrepreneur, digital transformation consultant, and a policy advisor. He's a co-founder of Dream Mobile Limited, one of Ghana's earliest and now more established tech startups since 2007. And Derry is keen for creating smarter and more enriching life experiences for society, and he continues to guide Africa's innovation economic growth. Derry, if you can hear me, kindly go ahead.
Right. Thank you very much for the opportunity to be here. And thank you, Senior Ken, for your very insightful presentation. Let me share my screen and then maybe run through it. And Senior Achibwe has said it all. I mean, in so many ways, what I'm going to say. So you can interact me and ask any question. You don't have to wait for me to finish. So you can have our question session as I, how do you call it? As I'm speaking. We don't have to finish our presentation before we do the question and answer session. Right. So Senior Achibwe, and I call him Senior Achibwe because he's my senior in, like, he's at St. Augustine's College, old student, and all our members are all seniors, right? So Engineer Ken, thank you. Yeah, so I'm focusing on adding to what Senior Achibwe intimated regarding the need for collaboration in building resilient fintech ecosystem. Right, and I will be touching on these topics with where I'm coming from, because my background has been in the tech space, and I've run a fintech company and continue to advise and do work in policy in that space. So I have some experience in that space, and I'll be touching on these things from that perspective. I don't know whether you can see my screen, but if you can see my screen, there's a diagram on the left of my presentation that is talking about how the Ghana landscape looks like when it comes to payment. I don't know whether you can see it, but in Ghana, we have the services that people provide or the fintech players provide, and then we have the players, the specific roles that they play in there, and then we have the channels that these players operate in, and then we have other private sector providers who play, and these are all fintechs who play different roles in that ecosystem or in that landscape. So, for example, we have the aggregator platforms who are bringing together different services and granting access through APIs or through channels to other providers for for them to deliver services, to deliver last mile. So these guys are not last mile, they are more like B2B. And then other fintechs pick the B2B aggregation to the last mile, that is to the consumers. Those are also, let's say, the last mile services are also your retail level services. Then we have the trust enabling systems that are trying to detect fraud and ensure that we have fraud issues are curtailed, like even the Credit Reference Bureau enables that. We have identity management systems that enables you to check whose identity that is trying to access the service. These are things in the current market. API providers. We have the innovation leading fintechs, those who are the top and providing very innovative services to the retail. And I'm going to give you examples of that. Then we have liquidity service providers who became very strong or who are very strong in the mobile money space, who ensure that there's enough float for the mobile money providers, either to cash out, to cash in, or to so when you pay somebody e-money, then they provide a cash to these kiosks and other mobile money providers, so they can give you physical cash or they can give you e-money. So these are they provide liquidity services. And then we have the e-commerce market discovery platforms. And these are different systems that enable you find services. And some of them, sometimes these systems are all together. So you have one platform that has, if you pick a platform like Hapto, it's a discovery platform, it's a payment platform. There are so many elements in there. And similar to Kari, which used to be SlidePay, and more or less all the apps, they provide both discovery, that is, you can find the service and pay for it. And then they provide also the payment capabilities as well. So in Ghana, the game is played in a more fluid way, right? And it is the way you have to be as a Ghanaian to survive in any situation, right? So I just wanted to give you a certain insight of how the market looks like. Then we have what, for me, the ecosystem has taught us, what the fintech ecosystem has taught us, right? What for me I've learned is we have a playground for testing new ways of doing business, right? And with fintechs, you see an evolution of financial services. We see some refinement in some areas. We see that people have revised their note on some levels. And I can give you an example. So typically, you will not get a loan if you didn't have a collateral or if you didn't have a bank account. But because of fintechs, now you have loans, right? Because of fintech. So we have rethought some of the services that typically banks or the traditional financial institutions wouldn't do. Fintechs enable us to do that. So I've mentioned that it offers new ways for people to engage with money. So selling fintechs can, for example, allow you to own a farm or own a part of the farm and be paying for the farm. So you have your money sitting there. You can actually own, there's a big 1 acre farm. You can actually own a certain part of it by either buying a certain part of it or investing in part of it. And then at the end of the month or of a period, you get your money back. And that transaction or that service flow is enabled by a fintech. There are situations where people own part of a cow, right? That there's a big cow and then you can invest in the leg and the leg is worth a certain amount of money. And then at the end of the period, you get your money back. So it brought other ways that people use money in a very creative way, crowdfunding, crypto, that the way you pay at church, quite different these days. I go to church and now they display short codes and display mobile applications that you can pay your tithes and offerings in. So they brought new ways as opposed to the cash, or in the past we go to cash, ATM, check. Now the fintechs have brought other avenues to do that. Then there's this unlimited startup scaling potential. So with fintech, there's quick growth if you get it right. So you can grow your revenue, then you also your geographical is enriched. So if I pick my example, SlidePay, because we're fintech, was able to move to Zimbabwe faster, right? So we were in Zimbabwe way before the COVID. And during the COVID, SlidePay became a big thing in Zimbabwe through our partnership with Stanbic Bank, and at the time Standard Bank Group in South Africa. So that because we're fintech, we're able to go there faster. If we're not a fintech, we'd have needed more resources, more money, more market discovery. So there's something to be said about that. There's this fluidity and ability to go things faster. So I already mentioned the introduction of new profit streams. We can cross borders more seamlessly. Like I mentioned, slightly cross borders. Where currently carries in Cote d'Ivoire and some other African countries. We couldn't have done that probably for just one big traditional bank with the current resources that is available. Then fintech also brings about more avenues on board, especially demographics and geography. So with fintech, then certain gaps are already bridged, like accessibility gaps. If you have a fintech that is serving people, the women, or they are serving the people with disabilities, then they don't have to go to the bank. They can use their phones and they can use the existing gadget they use to access financial services, right? So accessibility gaps can be bridged. Also, avenues to serve demographics that are excluded, like back in the day when you wanted to send money to somebody, either you use somebody traveling, then you send the money to that person. It can take several days. There's so many risks involved. Now you can use Momo to send that money to that person. And with fintech, you can send money irrespective of wherever you are in the world, and you can get it instantly on your phone. Before fintechs, you have to go and queue at a Western Union branch, or you have to wait till your relatives come from abroad or travel from the city to the village. But now these things can be cut short, and that is bringing more agility when it comes to transactions. And then micro versions of traditional services. So we have micro insurance, micro loans. At first you didn't have all these things. These things were done at the tabletop, but now because of services like Fido, because of companies like Leseho, backed by certain funds, you're able to now borrow money. So small monies. You can also access certain services at very micro level, very small amount, 100 cedis, 50 cedis, 10 cedis, So these are possible, even from a crowdfunding perspective. But the other dimension that the fintech has, for me, revealed to us is regulatory headaches that require response. And I know that our Bank of Ghana has faced their own fair share of regulatory headaches, right? Because when we started as a fintech, there was no clear-cut regulation on how you should operate. I think that it was a test bed. The first thing is, you need 6 banks to say that they want to work with you, before you can become, let's say, licensed. Then what do? You need 6 banks, but you cannot have access to 6 banks. Even back in the day, going to see a bank manager is a big deal. Like, you can't even walk to see a branch manager. It's just quite, banking used to be a certain way, but now it's a little bit easy, right? But the Bank of Ghana over time has been able to respond to it, because that was a headache to them. There were challenges, there were risk involved. There were money operational issues relating to how people handled money, whether they were going to create money that it didn't exist. These are all challenges that the bank and the regulator has to fix. There's a data protection regulation. There are issues around permissible activity. So because there's a lot of fluidity, there's so much superpower element within the fintech space, because it's a software that you're using to do these things, right? And of course, we also face challenges that requires us to be very resilient, right? What are some of these challenges? Fintechs need money, right? And a lot of times through their dynamics in the market, that can cause distraction, that can disrupt the market in a negative direction. And that will let people lose money, or that will let people mistrust the ecosystem. And we've already alluded to some cybersecurity issues, regulatory compliance issues, and that is one of the big things, because compliant regulations sometimes, whilst it's in the best interest of the customer, sometimes also make it very slow for a fintech to respond to service experience needs, right? So those are some of the little gaps that we have. Customer trust and adoption, big gap, but no clear framework for customer operations. So how do you become a fintech? What activities can you do? There's a thin line, right? In Ghana, we have solved like a lot of the problems regarding this, the the frameworks, but there's still more room for improvement. Interoperability gaps, how different fintechs and different institutions, both at the regulatory level and also at the service delivery level, can work together. Identification gap, who is who? We have Ghana, the Ghana card right now. How easy is it for people to access the Ghana card data to offer services? There's still some gap, there are cost elements that are very prohibitive that has to be addressed within the identification space. Fraud is a big deal, and you need identification to sort out some of these things. You need a lot of collaboration to sort these things out. People circumvent, lay down approaches to accessing services just to defraud people, and that is a big problem. And that's something that is a big risk that makes you lose money. When we're running fintechs, we lost over at a time, probably 2014 thereabout, if I'm not mistaken, we lost a hefty amount of money, an equivalent of 150, over $200,000 at a time because of the exchange rate, right? Because of circumvention, and I can tell you the story later. So and people still lose money, right? So these are big gaps. And the reason why fintechs have to be resilient, because that's the only option that you have. It enables you to stay strong, and when there are bad times, enables you to respond better when they are bad, like COVID. So COVID, for example, happened, and companies that had in place the infrastructure from a data perspective stood stronger, were able to respond quicker and had little impact. So when you're resilient as well, when the volatility comes, when the cybersecurity issues come, you're able to stay stronger. People believe in you more, right? We are running a new e-commerce service called audible.com, and I realized something. Whilst we are pushing for people to make payment online, people also want to pay on delivery. And one of the reasons is people have been defrauded, right, by other e-commerce platforms. And for me, I realized that customer confidence is very critical, right? And staying resilient, that means that being able to address or being able to show confidence in the customer, in spite of all these fraud going on, and in spite of the challenge of some people, hitting you up, and there are a lot of fraudsters that actually want to buy your stuff, is very critical. When you are resilient as well, you figure out a way to improve on your services. When good times come, you exponentially take advantage of. When bad time comes, you are able to, figure out a way to meet the demands of people, and also gain a lot more trust and more customers in the market. And when you are resilient, you survive enough to be able to gain, investors, because people like to work with winners, right? So when bad times come, when the ecosystem is still having issues and you are able to address them, you're able to stay strong, you're able to deal with these challenges whilst you are not compromising on your service proposition, it brings about confidence both in consumers and also in investors. Growing together, the power of collaboration. So moving on, I want to talk about the power of collaboration, that when we collaborate, we are able to innovate more, we become more resilient because we share the risk, and then we'll have better financial futures. What is the big general picture around the benefits of collaboration, right? What I see is you have more expertise. So the banks, for example, in my time when I was running GMobile and we were running SlidePay, we brought on board better proposition when it comes to our ability to develop software quickly, ability to convert new innovative ideas faster. We were able to solve problems that our partner was facing quickly. Like you say that we write a code to make it happen. We did so many crazy innovative things, right? Because we had internal expertise and we had the internal environment that engendered that agility and speed that was required. Within the banking system, there are several things that you need to do before even you touch code, right? When you also collaborate, you have regulatory support, and then also there's something I see about collaboration I'll talk about. A lot of times when we started our collaboration with Stanbic, we didn't have the current fintech regulation. So we would then leverage on their license to be able to deliver our services. So we had some kind of regulatory guidance and regulatory umbrella, from our banking partner with our regulators, right? They have increased customer reach. You can innovate faster, which I've already spoken about, and then you can mitigate your risk. Well, the other thing I want to talk about is collaboration around with fintech partners. And the picture on the left is Ghana.gov. Ghana.gov is a collaboration between Haptel, IT Consortium, and then ExpressPay. And they're doing a very great job. I pay all my taxes on Ghana.gov, and national service fees to NSS on Ghana.gov. So that's the power of collaboration, right? So this is a clear example of collaboration that is in action, that is manifestive. So there's competitive advantage, of course, expertise sharing, and also resource sharing, and then you can scale. So you see that because they're working together, they're able to pay people, like there's the skill, like there's almost every government services is on Ghana.gov. So that is also the power of collaboration. Then when it comes to working together with traditional banks or traditional financial institutions, one I already alluded to, it, crossing regulatory barriers. So with SlidePay, so SlidePay, let me just give you, has transitioned. So SlidePay started as iWallet, then went to SlidePay, and now it's called Cari. So those of you, I just want to say that you can go and download the Cari app, which is way above every market app that is out there. Crossing regulatory barriers is one of the benefit that we get when we work together with traditional institutions. Access to resource and infrastructure. So the banks have a lot of resources. The other thing that we learned collaborating with Stanbic Bank is that we picked up some of their best practices. And when it comes to all these regulatory compliance, the banks are way up there. So you learn from them. They have infrastructure, very massive infrastructure. So you're also able to leverage that. They have very quality corporate governance practices that you can learn from. And their banks are very big on training, or at least Stanbic. So you get to understand the ecosystem, and then you then add your nimbleness, to it. So that's a very significant factor of our collaboration. We reach more market. I already mentioned that we were able to reach. We went to Zimbabwe. We were able to tackle more channels and did a number of things in terms of our distribution. We're responsive. That one of the things that we did crazy things, like we did so many things I can't mention on this call. I wanted to say them, but I'll keep them right now. Then new territory navigation and faster product development. So a lot of time when you're partnering with these traditional banks, there are things that they're going to be slow on, but they can leverage on the fintech to deliver new services to new territories. Industry credibility for the fintech, you gain credibility. For the bank, you come across as a very responsive, innovative bank, because you're churning out services that other financial institutions are reluctant to push out because of their existing way of their culture, inherent culture. And then, of course, there's revenue opportunities. Then, Senior Ashigbe has already spoken about the regulatory part, so I didn't want to go into it, but the key thing is that when there's a lot of regulatory collaboration, there's that capability of solving problems faster, and there's market, market growth. And I can give you an example. Before the Bank of Ghana brought about this fintech regulation, our fintechs didn't have a locus in our financial ecosystem. We're just part players. We're that small boys that people need when they want to innovate, or where the presentation, features to tell stories, that would make some people very happy. But now fintechs are big players. Fintechs are making a lot of money. Some of the fintechs are actually making more money and moving in more revenues, more money than some of the banks, and even some of the financial institutions, right? So what regulatory collaboration brings about is it brings about a structured ecosystem that then invite very focused players who are interested in the space to participate. And when they're coming in with the right resources because they know it is deterministic how the ecosystem looks like and what it is like to play in that ecosystem. So with the collaboration with Bank of Ghana in the fintechs, you saw that there's a fintech and innovation unit at the Bank of Ghana. The unit came after the fintechs, right? So there's a lot of engagement. Then there's responsiveness from the bank, and the bank, meets the needs of the ecosystem players. And this is because of collaboration. There are more clear-cut, operating models that the fintechs have to play within. It is deterministic, and because of that, a lot of fintechs also were able to raise funding because now they have licenses like that. The ecosystem is now more aligned, is more structured. There's an architecture that is very visible and hard and readily navigable. So these are the benefit of how do you call it? When you collaborate with regulators, and then when you collaborate on cybersecurity, you build trust. You safeguard sensitive personal and financial data. One of collaboration that I'm hoping that should manifest or already is manifesting is when I was back in the day, I tried to bring all the fintech players together so we can create a common infrastructure to ensure that when somebody defrauds one fintech player, they cannot defraud any other person. We had meetings. I know we had one of the meetings at Stanbic Bank. We couldn't move it forward, but I know that right now, it's potentially existing because there's that collaboration going on, or it is easy to do now, talking to each other to make sure that you prevent circumvention, all kinds of fraud. And when we're able to collaborate on cybersecurity, there's a lot more, there's a lot more trust in the ecosystem, and Ghanaians will be more willing to adapt services like e-commerce without having to pay on delivery. One thing that Ghana will show you is that you might have your way, but we will still show you our way. Like when Uber came to Ghana, they were allowing only cards before. It wasn't long that they then allowed cash on arrival, right? But they came in with the card proposition, just as done in any part of the world, right? So when there's more trust in the system, people will be more inclined to integrate their payment systems or payment channels or payment cards into services that are rendered in Ghana. The other thing is that I believe that collaboration should not let us stay within Ghana. We need to now go beyond market expansion, very, very important. And then also when people are succeeding, I know that there are some of the local fintechs that are already out there. Within the traditional banking system, the Nigerians did it. I believe that Ghana institutions and Ghana fintech should be able to collaborate with international players and then be out there in the open, because Africa is big and there are a lot of countries that need fintechs already. Carry up, formerly SlidePay is already doing it in different African countries. I know that ZPay is also doing it in different African countries, and we need to see more of these stories. And these are possible when we collaborate, right? Very, very important. So what am I suggesting should be our next steps? Already, Senior Ashigbe have said it, regular communications and dialogue like we are doing right now, more regulatory engagement like what Bank of Ghana does, and also looking at regulatory engagement amongst regulators. Senior Ashigbe mentioned it, but I want to re-echo it. So cross-sector regulatory collaboration. So I am Security and Exchange Commission, Collaborative BOG, to now enable us fill in the other gaps in the other financial services like investment, brokerage, capital market. All these kind of conversations, you require cross-sector regulatory collaboration. There needs to be a lot more investment and funding in the ecosystem. We need to develop more talent, data scientists, AI specialists. We need to be able to build cybersecurity expert. We need to build a lot more talent, software developers. Right now, a lot of our developers always say they are front end. Now we need more back end developers as well. We need data sharing and standardization. And when we standardize, we can share data easily. There should be a lot more advocacy and public awareness. We need to and that will bring about more onboarding. When there's more onboarding, there's going to be a lot more service adoption, and fintechs are going to make money. And then we need to expand interoperability to other sectors. So ensuring that SEC and GIPS, like all these other financial sectors, have to be interoperable, not just GIPS and then the banks and the fintech, but we need to ensure that there's a framework that brings other financial services on top of fintech, fintech platform, fintech applications, right? What I want to say is that we failure is not an option in the fintech ecosystem. We can't fail, because that is one of the ways that we can reach the heights that we want to reach when it comes to our national development and when it comes to creating jobs, when it comes to solving some of our biggest problems. So we need to ensure that all fintechs are successful, putting the right policies, putting the right funding, lay the right infrastructure, data infrastructure, ensure that services such as national ID are available to people to access, to identify people, ensuring that services such as credit reference bureaus are opened up, people can access it and they are more affordable. And the new fintech propositions are built around some of these services, because we need new layers of service delivery that enables people move or encapsulate the big complicated requirement from people who just need specific aspect of a service to deliver to their customers or to the last mile. So that's the end of my presentation, and I want to thank you very much.
Thank you so much, Mr. Deriding. What a wonderful and insightful suggestion and contribution from your side. You know, we hear a lot about fintech, but there's a different dynamics when you actually hear it from the individuals who are actually on the field doing the actual work. I learned so much from this, and we're getting a lot of questions from your presentation. You know, I was particularly interested in your first slides, you know, the concept of agri-finance, you know, the introduction of crowdfunding and the likes of cryptocurrencies and other things. I think the crowdfunding is under explored sort of area. And I think, you know, there's more work that could be done there because of the nature of how our sort of financial market and financial players are structured. There was also more things that I picked up from your presentation, which is, you know, there are risks and challenges. And it was particularly interesting to me, which was the first one on there was access to capital. I must say, perhaps maybe patient capital. And then you talked about collaboration and the need to go global. And the last bit is what I wanted to actually ask a question on, which was, you talked about your expansion to Zimbabwe. Could you sort of maybe point out or highlight some of the challenges you face in terms of you know, sort of the adoption of what had worked in Ghana, and how some of the challenges that you face while trying to sort of implement some of those solutions in Zimbabwe?
Right. Did we face any challenge? I think that the good side of how that conversation took place was we already running it in Ghana, and at the time, Standard Bank Group used to be very in on our operations. So we didn't do the legwork interfacing. They picked up from the Ghana offering, the Ghana operational model, and they refined it to run it within the banking system in Zimbabwe. So in terms of challenges, I think more is trying to ensure that the proposition was very viable for the market. And that means that you are required to tweak things, right? And that also needs a lot of patience, a lot of engagement with the key partners. So I'll think more project management than market level gaps, right? Because the proposition was there were boots on the ground who were moving it into market. But then again, at a time, Zimbabwe was right for that because there were more POSs in Zimbabwe than there were POSs in Ghana. Like, they were already used to that. to payment using the card system. So the entry wasn't a big barrier like it would be if the ecosystem wasn't ready. Yeah.
Sure. Thank you for that, Derry. So we have another question, and it's in two parts. So the question is, how has the local fintechs, how have they been able to compete with the well-known global names? And then in terms of how has this competition among themselves and among the global companies shaped the innovations that we see in our industry today?
Can you please repeat your question again? I missed it. I had the last part, but the first part.
Okay. So the first part was, how have the local fintechs been able to compete with the well-known global names in the market?
Right. Okay. So I think that our fintechs have not faced very stiff competition from the global players. We've actually worked with them. So let's pick a company like Visa. Our fintechs work with Visa, right? We've also, the advantage of having an ecosystem that whose consumers are not at a time, let's say, we're not too very early adopting of payment service because of whatever reason, is that then this market is not is not attractive to some of these international players. So they are not so keen on coming. The market potential is too small for them. So it gives us opportunity to then build, own the market before they make inroads. For example, also PayPal has always been not in Ghana, right? So that would have been a very big competition, but they are not here. And they make it very difficult to be a part of the onboarding onto their platform if you're based in Ghana. So then again, the market attractiveness for me wasn't there for some of these big players. And those who wanted it in were the Visas and the MasterCards, who then worked with the banks. And then the fintechs now have to work with them to make their services available to other excluded demographics, right? So, and from a regulatory perspective as well, there's one aspect of regulation that gives the Ghanaian an upper hand when it comes to the fintech ecosystem. So within the regulatory framework that guides the payment service providers landscape, is that 30% of any licensed fintech with the BOG has to be owned by Ghanaian. So in Ghana here, every fintech has to navigate that 30% mark. And that also gives the Ghanaian a certain advantage and in. So for me, I see that in our ecosystem, the forces are mostly the Nigerians who have very large markets and able to enter the country. But apart from that, beyond the Nigerians, I don't see the usual suspect like PayPal, others, being any stiff competition to Ghanaians, any Ghanaian fintech. So we are this ecosystem is very Africa-led, like the Paystack from Nigeria. I don't know whether Flutterwave is still here, but we have Paystack from Nigeria that's quite popular. And then we have the other players in Ghana who are holding their own and owning a lot of the service provision in the fintech space. So that's my answer to that question.
Thank you so much, Mr. Derrydeen, for that answer. We're getting a lot more interest in some of your presentation and additional questions are coming in. The next question is there enough sort of talent pool in terms of developers that you need to and also consumer side in terms of expanding to the next stage, but also how is the educational sort of landscape in Ghana currently tapping into the boom that is sort of happening in the fintech space? If you can share anything on that.
Right. So in terms of talent, there's a huge gap. What is happening is that the ecosystem does not generate enough revenue for majority of the fintechs for them to afford the kind of talent. First of all, there's talent demand, there's scarcity. So that means that the ones that are there that are good are very expensive. And the ones that are expensive have very stiff competition because all there are companies in Ghana that are providing services for JP Morgan's and others, international, big companies on the other side of the globe, and they are competing for talent with local fintechs, right? So one, the scarcity of talent, so that's established. Two, there's stiff competition from the international companies for Ghanaian talent who are working through agencies to deliver services for them. And that's a big problem. We had similar problem. I've forgotten, there was this company that came up, they were based in Nigeria, and they swept almost every fintech house and collected all their developers, right? And gave them very lucrative, contract to build software and build or support services outside Ghana, and they were working from home and other dynamics, even before COVID, right? That's a challenge that we are facing. So there's not much, there's scarcity. A lot of the developers, we thought they are front end. They come out of university and they are all front end developers. And I asked them what's the issue. So they would complain about the practicality of what they are being taught. And that's a problem. So I think that we need to look at the approaches to instructing students on in the computer science field. And the students also have to do a lot of work. The students have to have a sense of initiative to learn on their own. Then there's a role to be played by the fintechs and other big and other organizations. We need to take them in as interns from year one early, so that we introduce them to the realities, so that it helps them align their life on, know where they want to be in the tech space. If we don't take them as interns and want to take them only when they are done with school and they should be ready for work, that'll be a tough one. So I believe that the fintechs and other companies should actually make it one of their goals to build talent without being a classroom. So that whoever comes as an intern shouldn't be perfect. It could be a first year, and we can help with product development, can help with requirement gathering. We need to have programs that embed industry practice from a very early age. And I also believe that we need to start doing software development from JSS, even way before that. It should be part of and parcel of the ecosystem, from right down to you're in year one, or you're in class one, or stage one, or primary one. You need to be introduced to computer science, languages, or elements of computer science and technology from a very tender age, so you get used to it. Currently, we have a very big gap when it comes to dev, and people are also in dev just for the money, and that's a big problem. There's no passion, there's no love. It's just because they think can pay, and the quality of devs for me is not as we used to know it, and the few quality ones too, you can't pay them because they are the few ones in the market, and they are lured by big companies, and note that now even some of the European companies are opening their market, like Germany. Now Germany has opened its market for people with talent, to come. So it will even become worse. So the key question is, how do we address these gaps? Because where I said that when I was at Dreamweaver, we used to do internships, and we could take 15 interns a semester, right? One vacation, and there are videos on YouTube to go and check it. And we used to take it very seriously. But at the end of the day, you can also lose all these ones to Andelas. I don't know whether Andelas still exists, but Andelas and there are a couple of them in Ghana, like Amali Tech and other companies like Tentable. They'll go there and then they'll be working for international firms. Yeah. So that's a big gap. I hope I've answered this question.
Yeah, you have, and it's a very, very interesting sort of space in terms of the deficit that you've just highlighted. I think in Ghana we hear a lot that there is, there's lack of opportunities, and here's the case where there's a deficit in that area. So I think perhaps your comment on perhaps recalibrating the curriculum to ensure that people are introduced to these computer science exposure much earlier on should be something that we should perhaps all encourage and get behind, so that people who are graduating actually essentially are able to find some of these opportunities. There are a lot more questions here, and we will encourage you to stay. But before we go on, there's one last question. This is personally for me. In the word on the street this year has been AI. The advent of ChatGPT has really revolutionized the way we work. And I want to know from FinTech's point of view, how are you leveraging on some of these breakthroughs to tap into the work that you already do? If you can sort of share any opportunities or things that you're seeing with us, it will be very, very insightful for us.
Right. So for me, prior to ChatGPT, we used to have a chatbot when I was at Dreamable. We built chatbot using Skype, using Facebook, and we're already offering customer support. Where we were not there, we had agents that bots were actually responding to customers. So that bridge has been crossed, right? So what ChatGPT has done is to now elevate that dynamic and make it more visible and brought more traction in that space. Now, how do we leverage that? There are different ways to leverage that. You can use similar technology to craft better, to educate customers on how to use your platform. You can build more experiential interactions and support services with customers because you know the right language to choose. You can build a very strong store of analytics with AI. So finding patterns in customer behavior. And these are things that we used to do when I was at Dreamable. Like we used to look at patterns. For me, I got introduced to AI in 2003. My professor was called Shistov, the Ukrainian guy, right? So we used to use them. These are things that we've used, and I believe that they are very relevant. So for your customer service propositions, you can craft better messaging. If you want to use a ChatGPT, can craft better messaging, can respond to customers faster because you can get it to work with you. When it comes to being more live and interactive, you can build solid bots who can interact with customers. You can build new channels for people to be able to do transactions. Using going on WhatsApp and doing transactions on your phone. I've seen that being implemented where there's a company in Singapore that is enabling certain supermarket engage customers using WhatsApp and even completing transactions and using WhatsApp. So I believe that AI gives us a lot of power in the fintech space. To especially look at study customer behavior and respond to them. We already experience it when you go on your social media platforms, you say something here, or you touch a certain, you read a certain text, and the next moment you go on Instagram and they're showing you a related item. They're looking at your behavior, the way they are advertised to us. So from a marketing perspective, we can hone our AI skills and build models that can enable us to reach our customers better. We can build models that can deal with the issues of fraud in the ecosystem, looking at people's patterns. So AI gives us huge opportunities. The danger with, let's say, not using our human instinct and not using our intuition and tackling some of these issues is sometimes the communication does not become natural. You're failing to think, so you're failing to connect. You're just sitting there, just typing ChatGPT, write me a line to behave this way. It doesn't really, for me, it doesn't cut it for me. I believe that we need to use these tools in connection with ourselves so that our empathy will not be inhibited because of tools, right? If you use tools too much, sometimes you think everything is 0 and 1. You forget the human element of things. So we need to find a way to balance our empathy to the AI tools that are available. But in terms of solving the problems and helping us innovate, data analytics and behavioral matching and finding insight within behavior to deliver better services to people is one area that we can use AI. On the cybersecurity front, trying to avoid fraud as well. Another area, yes.
So, thank you, Dean. Again, please, if you can stay on, we have a couple more questions for you. But we have the next speaker, and AJ will introduce him. Thank you again.
Thank you. So our next speaker is Mr. Solomon Ajay, who is the president of Association of Ghana Startups. He has a vast experience in terms of working with entrepreneurs and startups to really sort of understand their needs. He provides coaching and guidance in terms of what is actually happening on the ground and what is sort of needed to take us to the next stage. I think he brings a vast amount of experience in terms of working with people who are actually building things. I think his topic today is going to be around ecosystems for scalability in terms of getting us to the next stage. Mr. Ajay, can you hear me?
Yes, I can hear you. Good morning.
Good morning.
Right. So thank you very much for the opportunity to participate in this high-level program. Let me stand on existing protocols and usher myself in. I've just heard my senior colleagues, Senior Ashigbe and of course Deridin, share insightful thoughts on the ecosystem. I'm glad to speak after this big man. Once again, thanks for having me. Zooming in, I'm going to talk briefly on the startup journey, and then zoom into the startup bill that we are working currently on, that we hope that to get to Parliament soon to be passed into an act. Mr. Ashigbe talked a bit about some of the gaps that need to be filled. At some point, I heard him talk about funding, regulations, and other stuff. And Derry also hinted on some of these challenges and how he was able to overcome them as a startup himself. My role is to look at the future. What is the next way forward? And then how do we ensure that we can create a good, or let's say a better platform that will provide opportunity for any startup to be able to thrive and succeed in a space. And so as part of our work, the association basically is positioning itself to be an apex body of the startup ecosystem. And so we're bringing on board all startups across the entire country, as well as the startup ecosystem players, the enablers, the funding institutions, the DPs, service providers, the hubs, and everyone that have got service to offer to startups. So that is the work that we are doing as at the startup association. And so as part of our work, we were looking to create a policy, get a policy direction for or something that will guide the startups' works. And we came out with the Startups and Innovation Bill. And so for the past 3 years or so now, we've been working on this back and forth. We've done national sensitization, we've data collection across board. We've engaged series of players in the ecosystem. And we'll come up with a draft bill that we are currently refining, we'll fine-tune it to suit that we can lay before Parliament, maybe hopefully in the next sitting. Now we pray and hope that we can get it passed before the main election season zooms in next year. And so I will touch on just a few areas of it, talking about the key benefits or incentives of this bill once it gets passed into an act for the startup ecosystem. For all that Mr. Ashigbe said, for all that Deridin said, it all about startups. That means it all sits with us and ensure that how do we make sure that we create a conducive environment for growth or for scalability. The first thing that the bill is looking at is tax incentives. Okay, so there's a tax exemption that we're trying to work around. We realize that when you want to start a company, there are a lot of things that you need to do in terms of taxes. Even for the registration processes, You go to RGD, you go to GSA, you go to FDA, you go to Bank of Ghana. There are various forms of taxes that you pay. And we are trying to say, per this bill, is it possible to give the young guys some kind of exemption from that so that they wouldn't need to spend so much money on these regulatory payments and all that. They can focus on whatever small that they have for the work, the core work that they need to do. All right. So that's the first thing that we're trying to ask. That startups, the certified startups under the law are entitled to certain tax incentives for a period of 8 years as defined in this bill. Right. So moving beyond the tax incentive, I will talk about the innovation and startup fund. Again, I heard Mr. Sigbe talk about that there's a lack of fund to tap in to be able to start or to scale up. So we're trying to use that bill to create a fund, a national fund known as the Ghana Innovation and Startup Fund. Now, the objective of this fund is going to be to provide funding for the startups. And of course, to achieve the objective of the fund under under certain sections of the bill, the startup will need to meet a certain criteria. And then based on that, you are entitled to tap into the fund to be able to, support your business, to cushion you up one way or the other. And the fund is structured in such a way that they got various sources of money coming in from government section, from the private sectors, from the DPs, from certain institutions, and of course from key or let's say post startups, companies that have been started before who have benefited from the bill. They may also look back and contribute to this fund. And so that is what one key thing that the bill is trying to create, the fund that will support the startups on their journey. Again, beyond the fund, we're also trying to create an investment platform opportunity for these startups. What we are saying is that if we have, let's say, Derry Dean being a big man in the industry, and Derry is interested to support startups, what are the incentives that Derry Dean will get as a big man who may not necessarily be a startup, but who may want to support startups? Can there be some kind of exemptions for him so that he know that if I pick 3 or 4 startups and invest into their company, of course, though I may be getting my benefit from them directly, in the states-wise, what benefit am I also getting? So that is also captured in the bill. Now, we also look at access to markets. Currently, talking about procurement, are startups given the some kind of priority when bidding for government contract or for certain contract per se? We're trying to talk about locations. That is it possible to have some kind of a location for startups? So there's a big contract from the Ministry of Communication where everyone is supposed to bid for it. Can there be allocation? Is it 20% of it at this part, 20% of this project, we leaving it or allocating it to startups? So the startup can now apply for that session. Instead of us always being boxing among the big guys. We always box among the big guys and we end up losing because they get all that they have all that they need to have to be able to win over us. And so we are trying to say that can we get some priority for startups when bidding for such government or certain project that we always fight for. And again, looking at startups from youth-led startups to PWDs and women-led, all these are captured in the bill. So it is not just a certain kind of people, but then everyone is captured. It's what we call the inclusivity. From the PWDs, the women needs, is all addressed in this session. Again, we're talking about international trade, where we say startups representing Ghana at international trade shows and fairs may receive travel support and expedited passport processing funding for this support, as well as other things. Then we just talk about how they're able to move to Zimbabwe. Did they get a government support to move to Zimbabwe? I may want to know. But again, we're trying to say that, can government facilitate some of these things? He mentioned ZPay. ZPay is now doing well, moving beyond Ghana, many countries. And the question is, what support is government giving to this startup moving around across the board? Can there be some kind of apart from the legislation, so funding moves, some support in terms of documentation or networking back and forth and all that, to be able to support this young startup, to be able to move beyond Ghana and of course push the brand Ghana across the board. So that is something we're also looking at. Again, we have a session that talks about insolvency and bankruptcy. If your business collapse one way or the other, how do you get back on your feet? Is there any easy way for you to get back on your feet, and then and be able to make progress again? There's a session of the bill that talks about insolvency and bankruptcy support. Again, there's a session that talks about employment hiring assistance. So, for instance, we've seen sessions where NSS, for instance, the government posts NSS personnel to companies, certain private-owned companies. But then when you're a private company and then you want some, you may have to make some payments and all that. You can get them, but then you need to make some payment. And again, we're trying to say that can government even look at startups and support them with some of these. And again, we look beyond just the NSS, because NSS is just a 1-year term. But can we get support like this? The government helps you to employ, not necessarily NSS, but employ. So government helps you with employment support for like 5 years, so that you know that as a startup, in the next 5 years, based on you meeting certain criteria and getting the license to be called startup, you have access to 3, 4, or 5 employees in various fields where government takes care of their salaries and all that, and you can then focus on your core business without necessarily bothering about raising salaries and all those kind of things. So this is one of the we're also talking about in the bill: employment assistance, employment hiring support. Again, we'll talk about the IP, intellectual property, and of course, research and development. What measures are there to protect the ideas and inventions of these young people that we call startups? We know there's under the RGD, there is a patent office and all that, but how easy, how accessible, how sensitive are the young people on this? How many of us we know about the processes of these IPs and all those things? And again, how can young people be able to take advantage of whatever the IP or patent office have for the ecosystem? And so the bill is talking about getting support to be able to build the capacities of young people to be able to understand what the IP things about. And again, the getting support to draft the filing process and all that. I mean, you need to have a documentation before you can file. Who gets support? I need to hire a lawyer to help me draft all those things. I need to draft before presenting it to the office and all that. Can I get some support to be able to draft these things easily? And even after drafting and submitting, the management of it in terms of conflicts, how do I go about it? Who helped me on the way? All those things are things that we are trying to talk about in the bill. And so from IP to the filing, the management, the commercialization, and all those things, the knowledge transfers and all that, system that can guide it in a startup way. We know there's a national framework already, but in a startup way, is there anything that can guide us or support us on that score? And the bill is trying to address all this. Again, they talk about capacity building and development, organizing trainings and exchange programs and all that for these young people to be able to benefit from. And so these are some of the things that we're trying to talk about in the bill. I'm actually on the way, and I don't want to take much of your time, but I want to just focus on the bill to talk about the key benefits of this bill, and then I'll stand by for any questions there be so we can address it. But the key point is that the startup journey has not been easy. Derry just shared it. It has not been easy, and those coming up are not taking it easy at all. We're trying to look at it from the regulatory framework. What can we do to support these young people? Do we appreciate them even much? And getting in support. You look at Nigeria. Nigeria have got about, I think 5 or so unicorns. And Ghana, how many do we have? For the startup we have, Ghana don't have any. We have 0 unicorns now. Maybe some of these young people may get to that level, but then we don't have them listed. And our focus is to be able to create a startup unicorn in Ghana within the shortest possible time. And what do we need to be able to turn the fortunes around to create a startup unicorn? And so these are something that we're going to talk about, or we're talking about addressing in the bill. And we're hoping that all of us, everyone will come on board, share their input, comment on the concept of it, make your input, and then once it gets to Parliament, we all know how bills when I get to Parliament. I remember there's RTR bill took many years in Parliament, but then again, when the people come behind and able to push it, it gets the audience that it deserves. And so we call on everybody, all of us, to be able to join hands with us, and let's push this bill to Parliament. Let's advocate for it as much as needed to ensure that it gets passed as soon as possible, to be able to support us as young people, as startups on the ground, and of course, as investors in a startup phase. So without much ado, I'll end here and then open up for questions. And of course, I'll clarify any if there be. Thank you very much for the opportunity.
Thank you very much, Mr. Ajay. And I find your presentation quite interesting, because it links back with what Mr. Ashigbe talked about in terms of policies being, guardrails rails rather than feeling like it's stopping things. Mr. Jerry Dean also touched upon policies being an enabler and sort of ensuring that it is fit for and nurturing for the environment to thrive. In line with that question, how do we, and there's a wider context to this question, because I pay attention to the ease of doing business in the world. And Ghana is currently ranked around 118 out of 190 countries in the world. In Africa, we are around 13 or 14 or so. This means that there's obviously more that could be done. So my question is, how can we ensure that this bill becomes an enabler rather than something that is stopping startups from actually executing?
Well, so the good point is that this bill is a bill that has been drafted or developed by the startups ourselves. So the focus is to make it our document, our bill. And so if we look at the drafting phases, like I said, we've gone around the entire country soliciting for the views of the startups. And we've done so by engaging one-on-one engagement in the conferences and forums and all that. And so the key point is, what are we as startups looking for? So it is our needs and wants that have been captured in this document called a bill that we are pushing to Parliament. And so it is to support us and not to rather be a block on our way. And so we are still engaging and we are still funding to suit. But our key focus that this is not going to be a government-led or government, bullying around, but then it is something that has been done by us and for us. And we, as the startups, are going to be the ones who implement this bill with the support of government as partner. And so government is going to play the role as a partner on this. And so, yes, it's going to be a good platform to regulate, sort of, but again, to make it easy for us to be able to operate, looking at what that is bringing to the ecosystem. And so, yes, we look at all that, and we are ensuring that the bill will support us rather than being a block on our way.
Thank you, Mr. Ajay, for that answer. We have another question, which was centered around entrepreneurs and innovators who want to go towards the rural areas. And the question is would the bill have specifics to incentivize these entrepreneurs who want to go into more remote areas as a way of supporting them or incentivizing them, whether it be financially or giving them mentorship and other things, to obviously ultimately help with stopping the sort of urban migration and also be able to sort of create more economic activities in some of these rural areas?
Right. So decentralization is key on these things, and we are working on that seriously to ensure that people will not be migrating from whatever they are to Accra because Accra is the central. So if you look at it, I don't know if you guys know about the NEIP, which is a key partner of what we're doing. Just about a month ago, there's some funding from the World Bank to support the hubs to be able to support startups on the ground. Now, we ensure as part of it that the fund is not given to only hubs, known hubs in Accra or in Kumasi or whatever it is, but also to hubs that are within the remote areas. So equity is key for us in all that we're doing. And we already shown traction on that through the work that we did recently with the Hub Network, and then of course the NEIP, ensuring that hubs that are the remote areas get the funding that they need to get to be able to support the startups on the ground. So we already working on the ground at the grassroots level. We are working towards that seriously, and the bill is going to, ensure that these things are much more done to make to support the people on the ground at the grassroots level so they may not migrate to Accra. So yes, to answer your question directly, we've taken note of that, and we're ensuring that people will not migrate more, but they rather stay where they are, and we put support to them at whatever they may find themselves.
Thank you very much, Mr. Sumanjay. We do still have many questions for you, but if you can just stay on, we'll get in the next speaker and then we'll come back to you with the questions.
Wonderful.
So our next speaker is the head of advisory of Black Star Group. He oversees all the advisory mandates of the firm. He's executed about 1 billion transactions through Europe, particularly in Norway, and he's also worked in China as a senior advisor for First Equity Finance Group. He has a wealth of experience in M&A, project financing, deal restructuring and negotiations, and he's here to talk about capital raising in the fintech and SME space. So Joe Pierre, if you're on the call, kindly go ahead.
Hi, thank you very much for the opportunity. Thank you, Team Black Star, for organizing this session. It's been interesting from the day one, which is first till now. I'll go ahead and then share my screen. I'm essentially going to present on unlocking diverse capital avenue for growth in Ghana. We'll look at the capital market as well as the private equity space. I hope my screen is displayed. Share. So I'm quite happy with what my other speakers have spoken about regarding the startups from the collaboration that is actually needed, as well as the enabling platform, the policy legislation that is required in order to drive all these into growth. Just Solomon also even mentioned something interesting, which is Nigeria, which has a lot of unicorns, yet when you come to our space, which is Ghana, there are no unicorns like that, but I think there's much room for improvement. And aside the policies and everything, it's quite important to understand that there is also the element of funding, which is really required to make these happen. And so in the presentation, we'll go ahead and then look at some various avenues through which we can raise capital. But the content we'll go through is to look at the private equity within the African space, how the fundraise activities have been. We'll look at the fund concentration, typically that would focus on Ghana. We'll look at the capital market as well, which would essentially digest more into the equity and debt capital activities. And we will drill down to Ghana to focus essentially on the avenues for growth in capital, that in Ghana specifically. Some key business considerations and investor considerations would also be looked at, and then the key challenges and then growth to unlock these capital opportunities. Now, within the private equity space, it's quite interesting to note, typically for Africa, where funding has really happened in Africa, I would say, looking at a 6-year scope. If you look at 2018, 2019, 2020, up to 2023, we realized in 2018 that the funding of around 700 million was raised from private equity to various startup businesses. 2020, it grew around 114% to 1.5 billion. That was very steady. It dropped a bit to 1.1 billion, and then it also increased significantly to around 373%. Why 373%? Because that was the stage where there was a boom in the fintech space. A lot of fintech companies were emerging, and they were raising funds to essentially scale and then grow beyond their borders. It's interesting to also note that in 2020, it rose to around 6.5 billion. And then in 2023, as at June, the data stands at 1.3. Someone will ask why is it quite low within this year? It's because of a lot of economic indicators from global recession to the global recession speculation to post-COVID recovery, Russia-Ukraine war, which has also been a major contributor to most African economic issues that they are currently facing. Aside that, it has also created something we call the uncertainty. And so currently, you know that we don't know what would happen next. And so investors are also quite careful in deploying, make sure that they are deploying actually to the right businesses that needs funding to grow. Now, when we also look at the space, one of the things we realized is that 2021, 2022 was a funding heat wave where a lot of funds were being deployed to various industries and sectors. And within 2022, from July to June 2023, we realized that it's been like a funding winter where not the funds are not being raised, but essentially we are seeing a drop in funds, or we are seeing a drop in deployment to various investment. So when we look at in 2021, within the heat, fundraising heat, you realize that about 6.5 billion was raised. And out of these 6.5 billion that was raised, you realize that about 1,000 or 1,100 unique investors participated in these deals, and most of these deals were even less than $100,000 within the African space. But when we look at from July 2022 to June 2023, it's dropped considerably, up to 4.1 billion, and essentially about 800 unique investors are participating in these various deals. Someone will ask, what has been the drop? Why the drop? There has been a drop, as I explained earlier, because of various economic events, various uncertainties, and individual economic contributors that have made investors quite strict now, quite careful in making sure in deploying to various businesses. But just to mention, there are a few big four, which we call them, within the African continent that have really been the biggest contributor to this equity funding that are being deployed, from Nigeria to Kenya to South Africa to Equatorial Guinea has actually been the main contributors to this capital. And so when you look at it, you realize that about 82% of the funds that have been raised, which is close to 4 billion, has been attributed to these various countries. And if you look at the same funding within the space, you see that about 53% of those, the value has also gone through fintech. Now, in the next slide, we look at the various sector distributions of fund. You realize that it's been good from 2019, 2020, 2021, 2022. You've seen at least there has been even distribution, which means at least every sector has had a taste of capital that has been somehow deployed, from marketing to entertainment to prop tech to AI, IoT, transport, logistics, energy, edtech, and all the various industries. But when we look at the big four, you realize that fintech has been the lead with about 2.7 billion, to e-commerce about 1 billion, e-health about 400 million, and then edtech about 120 million. Now, when we look at the funding trend, there has been an interesting trend which I wanted to share. You look at 2020, 2021, 2019, as well as 2023. In 2019, you realize that the funding distribution, the major part of the funding went into transport and logistics. We had Egyptian hailing company like SWV raising about 80 million in order to fund their big deals. But in 2020, it's quite interesting that companies like Sendwave raised about 500 million, Nigeria Paystar up to north of 200 million also raised funding. And so you realize that in 2019, if you look at the data, you realize that here, logistics had about 39%, And in 2020, it dropped to 18%. But then you see the emergence of fintech from 20% to 22%. And when we move to the next data, you realize that in 2021, now it moves from the 22% to doubling to 48%. And this also, in 2022, we see it also moving to 47%. So, which is quite interesting. And these individual contributors was also a result of the boom in the fintech space, where they were receiving a lot of funding to essentially scale their business and move to the next step. And the individual contributors to these various funding has been companies like the Chipper Cash, Wave, Opay, Flutterwave. We've heard about these companies. For example, if we are looking at a Nigerian company that has been a unicorn like Flutterwave, you can see them there. And essentially firms also like Move, MNT, Wakaso, InstaDeep within the transport sectors have also led to the contributors within the 2021-2022 space. Now, looking at the big four, it's quite interesting to see where the money is going when we look at this data. Typically, when we look at this data, it tells us that funding has really gone into countries like Nigeria, where if you look at the total value of funding within the private space for startups, about 55 or 55.9% of the funding went to Nigeria. When we look at 2020, you see that about 30% went to Kenya. And when you look at 2021, about 52.7% still went back to South Africa. And in 2022, about 36.3%. One would ask, why is it that Nigeria is receiving all the funding and the others are not even coming in? One of the things we've seen in the market and the trend has been that their ability to scale. We all know Nigeria is an extremely big market with a lot of opportunities. So if their market alone and being able to also grow beyond their jurisdiction to other markets has really helped them essentially get a lot of funding to be able to scale these companies. Now, it's quite interesting that we are not going to leave our space. How has the funding strategy also, or the funding trend be for Ghana? Currently in Ghana, looking at a 4-year period from 2019 to 2022, we realized that in 2019, about 20 million was deployed into startups in Ghana, but within 12 deals. In 2020, we had 20 million, which dropped essentially, but we had 15 deals. In 2021, we also had 20 million, surprisingly, but that was for 18 deals. So essentially, we see a growth in the number of deals. And then in 2022, we have around 149 million with about 23 deals, which is quite interesting. And in the next slide, we'll talk about companies that have been able to benefit from these funding that have been deployed. So we see companies like FinTech, or within the FinTech space, we see ZPay now all over the place, raising around 7.9 million in 2021. We see companies within other sectors like eHealth, where we have Excel, we have Jetstream raising about 3 million. We have a fintech like Apps and Mobile raising about 1 million. When we move to 2022, we see we hear companies like fintech companies like Dash, about 38.2 million that has been raised. Fido raised close to 30 million. Float raised 17 million. eHealth company mPharma raised 35 million. That is funding about 15 million. And if we look at funding below 15 million, we have Redbird, which is an eHealth that raised close to 7.6 million. Now, how has the African capital space also performed? It's also interesting to note that if you will check a 4-year space, the market has also considerably, a lot of activities have happened in the market. In 2017, we see about 17 deals. In the next slide, I will talk about the value of those deals, but in 2018, we see 17 deals. 2019, we see about 9 deals. 2027, there has been a drop, but interestingly, you see the value of transaction has also increased. In the same way, when we look at the debt market activities in 2018, we see 130, 131 in 2019, 81 in 2020, as well as 2021, which is around 94. But when we go to the next slide, you see that month on month. Now let's look at January, February up to July of this year. We can see in January about 29.2 million was raised from the capital market. About 9.8 million was also raised in February. March was about 224, April about 8.4. We have May about 300 million just for one company. In June, about 5.6 just for one company as well. And then in July, about 400 million just for one company as well. So essentially, it also tells us that within the capital market space, a lot has also happened. Good deals are flowing through where we have startups also raising capital from these various avenues in order to grow their business. Now, holistically, when we also look at the global trend, we see that fundraise have also grown astronomically. When we look at 2015, where fund need was about 43 billion, and in 2022, where we see it has quadrupled up to even 225 billion. So it's essentially tells us that there are still unlimited capital within the global space waiting to be deployed to various investment avenues and vehicles that have very interesting models and ready to grow. Now let's look at the avenues for growth within our space, that is Ghana. Essentially, it's quite interesting to see that in as much as there are limited capital, that would be one of the challenges we'll discuss. It's interesting to know that within our space, that is Ghana, there are avenues through which startups and companies can essentially raise capital, from the stock market to the bonds market to the Ghana alternate market. It's quite interesting that various capitals can be mobilized from these various sources. Gone were the days where the only market most of the companies knew how to raise capital from was the debt, and which essentially had to do with banks. Now that story is no more. With the Ghana Stock Exchange, companies get to raise monies from equities and bonds through the market, through IPOs. Now, within that same space, if we look at the bonds market, for example, companies have opportunity to raise a corporate bond also from that market within the GATT, which is essentially the alternate for SMEs also. So it's quite interesting that for SMEs, there is also a market for them. So gone were the days where they would say, well, apart from the banks, no one is willing to give us money. Today, we have the Ghana alternate market where SMEs and startups with very good growth trajectory can essentially go and then raise capital from these various industries. Now, within the same industries, there are players within the industry, which is quite important for them to know. For example, we have the SEC, which has an oversight in ensuring the activities within the capital space. We have the custodian and registrar, where any company trying to raise funding need to make sure they have these players available to support them within their fundraising process. And for custodians, they are like financial institutions that essentially help hold guard or safeguard investors' interests or assets in the company they are investing in. The registrars also mostly serve as a registrar to maintain records of shareholders and the transaction as a whole. We are market participants, which essentially include the individual investors, institutional investors, brokerage firms, investment banks, asset managers, and other financial intermediaries, which essentially aid these businesses from SMEs, corporates, to essentially lead them into the market to raise this funding. Now, so one would ask, what are even the options that are available? In Ghana, I will share, the list are exhaustive, but I will share two routes that are available. One is the equity route, where you go through the public equity route of either IPOing the company or listing by introduction. or going the private equity way, which is raising through a private investors to essentially scale the business. We have the debt route where you either go through the private debt space of speaking to debt investors, private debt investors specifically to raise debt funding to fund the business, or going through the public debt space where you get to issue. In Ghana, there's possibility to issue commercial paper, NCDs, which are non-negotiable certificate of deposits, debentures, as well as corporate bond issuances are available or on the market for companies to essentially raise funding to grow their businesses. Now, when we look at the route one, it's interesting to mention that there is a space for every business at every stage. So, for example, if it has to do with IPO today, no business can say, I'm small, I can raise money. If you are big, also the GSE market is available, the stock market is available for you. If you are small and you are also within the SME space, we have the GAT, which is essentially the Ghana Alternative Exchange, which is also available for you to essentially list on. There are a few pros and cons within the industry. I'll pick one or two. For example, if you are going public, one of the things is that there is high opportunity because you get to pull wider investors to essentially raise funding from. One cons has to do with the fact that there are regulatory requirements, which of course now from these have really been improved on to the extent that there are possibilities to even ask for exemptions from some of the requirements that have been made available. The goal is to really encourage most of the companies that want to list on these exchanges to do so at a very within the compliance level, yet as comfortable as they can to also come to the market. There is also opportunity to list by introduction in the market, and for these possibilities, essentially there is increase in liquidity. It requires no underwriting fees, minimal advertising, because you are essentially being introduced into any of the market, either GSE or the GATS. And you can also go the private equity or venture route, where from pre-seed, that is even before the idea is conceived, up to Series D, where we have the unicorn companies, you get to raise funding from private equity funds or venture capital funds, which are ready to take much bigger risks compared to the exchange route. Now we also look at the second route, which essentially has to do with the debt route, where we can go the private way by placing a private placement, raising from a group of private debt funds with very flexible terms. It's quite much faster compared to either the term loans. And in this case, you get to build also long-term relationship with the investors. And the only cons that comes with this is that there are less liquidity, as well as less investors that essentially participate within this space. But when we look at the private or the public space, for example, issuing commercial paper where you have short debt instrument that a company can issue, and you have companies meeting their short-term financial needs. At this stage also, it's a very low cost of borrowing. Sometimes collateral requirements are quite flexible. There are also, in terms of its cons, there are limited maturities, as well as it can also be, they are issued mostly in larger denominations. Now there are also NCDs where essentially companies can come to market to essentially issue deposit, which are freely traded on the secondary market, and also corporate bond, where companies can essentially issue bonds to the public. And one of the pros and cons that comes with it is that you get diversified funding sources, which is quite important. It also enhances the company's reputation, as well as also provide a tailor-made maturities to these companies. Now, there is also interest payment that comes with making with it. And essentially, mostly once upon a time, we were all aware that government bonds were, government securities were only assumed to be risk-free, but today it's not the case. And so once you are coming to market with a very competitive, as a competitive company with very competitive growth strategy and growth story, I think companies within that space would be able to raise at a very good rates. Now, I wanted to also share the overview. If you want to raise funds within either the public or the private space, what really does it entail? At the company level, it's quite important to seek board approval, shareholder approval, and appoint an advisor that would support in the deal. It's also important that the next stage is to make sure that once the advisor is appointed, the team, between the team and the advisor, they get to essentially have a kickoff meeting to lay down the executing strategy, the marketing strategy, the clear roadmap. The third stage is also to have conversations about the capital raise itself, and essentially start putting together the documentation and other key documents that are required in order to flow through the transaction. If it's a private one, unless it's within a space where the company is regulated, but if it's a private, if it's a public raise, that is where the regulatory would be required, especially for SEC as well as GSE. And then once those require regulatory approvals are made, there could be an investor roadshow, engaging investors to be able to raise the funding that the company requires. There is also a window that is open for the offer period within the fundraise. Bids are reviewed from investors, and then the final term sheets are issued, and then negotiations and closure is done within that space. Now, it's quite important that after looking at businesses that have raised capital over time, so one of the things we tell businesses is that as a business, if you want to raise capital, there are some key indicators you should also look at in order to select an investor. You know, it's not only about raising the money. If your interest is only to raise the money and grow yourself, that is also okay. But if you are looking to also access value from the investors, then it's quite important that as a business, you try and align your considerations within these three key areas. The vision of the investors are quite important. Here, you ensure that the strategy you want to deploy essentially aligns with the potential investors, because maybe you don't want the case where you take their money and yet your plan and where you want to grow does not essentially fit into what they are also looking at. Eventually, you get frustrated at the point. You also want values. There are some private investors that can give you value. Value, I mean, they can give you market access, they can give you strategic partnerships. So they don't just come with money, but they open you up to more possibilities that are available within your jurisdiction and even beyond your jurisdictions. There are other, like also financial alignment is quite also important. Understanding the potential investors' financial goals and understanding their approaches to support is also quite important to note as a business when accessing fund. The other thing I would also speak on has to do with the companies that have been raising funding so far. We've seen a lot of key indicators that have led to I would say a deal breaking, which includes sometimes companies not having information on their competitors, persistent negative cash flow being recorded, outsourcing sometimes their core competence, high customer concentration, they burn a lot of cash not knowing their customer acquisition cost, and very weak brands have been notable to be some of the key indicators that have led to fundraising leading to a deal breaking. Now, some of the key investor considerations they also consider is a strong and experienced management team, good and robust financial system or financials, return on investment, diversifying their offering, having good risk management and risk structures in place. Key to them is the use of funds. It's quite important what the fund is being used for, as well as their ability to scale. Now, let's look at the key challenges and as well as the strategies for growth. Now, the key challenges within our space, for example, in Ghana has been limited access to capital, currency volatility, infrastructure deficiencies, access to market information. There are some industries where the information are not too clear or non-available, regulatory requirements, limited investor education, because as well as risk perception about the country, political stability, which in our case we can say it's quite good on our space. And some of the strategies which we can use to unlock growth capital has to do with improving infrastructure, which essentially has to do with the provision of the platforms which are enablers to help these companies essentially raise funds, enhancing regulatory reforms, that is not making the regulation like a bottleneck to the company's growth, but rather allowing the regulations to rather guide the companies to be able to succeed and raise capital. The next thing also has to do with strengthening investor education, which essentially we see that happen within the exchanges. Now we see they run a lot of education, a lot of awareness, allowing businesses, SMEs to understand that there are various ways you can raise capital. And these are quite good initiatives, I would say. And once these are also continually being done, it would really re-echo to these businesses to know that you are not alone. In case you need capital to be able to grow your businesses, these options are available. Now, the other thing is also facilitating the access to finances, and as well as making Ghana a market for investment destinations. Once we put in place these strategies, we believe it will be able to help these companies unlock capital and grow within Ghana and beyond. Thank you. Now, hand over. If there are any questions, I'm available to answer. Thank you.
Thank you very much, Mr. Joe Appiah, for your presentation. It's very insightful. We do have some questions for you.
You can go ahead, please.
As you were going through your presentation, there were a couple of questions that sprang up. And the main one predominantly that caught my eye was the fact that there's a huge funding gap in terms of the fintech space within Ghana. Currently, when you look at the capital market space, there's a lot of the pension space holding a lot of cash to try and navigate DDE, and everyone is asking for alternatives. What kind of work is being done from people from your side in terms of the advisory space to present some of these opportunities to some of the pension schemes around the country? Because one of the saddest things one of the most discouraging things that we see from our side is that when fintechs within Ghana think about raising capital, their first thought is not to look at the domestic space, but to go for foreign investors. And yet we have a situation where pension schemes and others are crying for alternative and diversifying sort of opportunities. So the question is, what work are advisors like yourself doing to ensure that some of these opportunities are presented to capital within Ghana rather than always looking outside?
Okay, thank you for your question, AJ. So just to share with you, within the, for example, let's look at the pension funds we have in Ghana. They are allowed to invest in funds rather than invest directly in the companies. So at our end, what we do is that when we have most of these interesting businesses and these deals coming up, it's quite interesting to note that when you look at the portfolio construction of these institutional investors, they have a percentage of their capital that can be deployed in funds, like for example, in private equity funds, where they can also onwardly lend to these companies that need funding to grow. So for us, as within our advisory, what we essentially do is that when some of these good deals come, we look internally by number one, speaking to these fund or these institutional investors that have money. They would essentially direct you to their alternate fund and say, listen, speak to our alternate investment fund we've invested in, and then or possibly they get to do intro for us. You are aware that when it comes to the institutional investors, they receive tons and tons of pitch and opportunities coming every day. But once we get these referrals coming directly from those that have deployed funds into them, it makes the conversation a bit easier, and also it drives the conversation quite quickly compared to going alone or looking for the funding. So in our space, that is essentially what we've done is partnerships have really helped us to make sure that at least these deals don't go straight to the international people, but at least it's run hybrid between the local as well as the international people. And whoever gets interested and wants to deploy, we allow them to deploy. Thank you.
Thank you. Thank you for that, Joe. Derry, if you're still on the call, we do have a question for you. So the question is that, is there specific criteria on how Ghana will become attractive to payment partners like PayPal?
Right. Should Ghana become attractive to payment partners like PayPal? What proposition is PayPal offering that Ghana, within the domestic space, we don't have? I think that Ghana has everything that we need domestically. What we need to bridge is our ability to move money beyond the borders of Ghana seamlessly. So with that, I will look for more, I'm going for more partnerships as opposed to specific, let's say PayPal come to set up here. So I think that from a regulatory point of view, that the kind of regulatory regime that we have makes our ecosystem very attractive, because it's very deterministic, and you know exactly what steps you should take to be licensed to operate as a fintech. But in terms of having platforms like PayPal here, it is good. It is good only for international transaction, but within the domestic arena, I believe that we have sufficient fintech players that offer value. And as to whether we need to do more to attract the PayPals, if they're coming in as investors within existing, as investors in the ecosystem, so be it. If they're coming in so that the customer will feel good and have more services, and they'll obey the 30% local ownership rule, why not? Because then that's new opportunities for new employment, new service propositions and stuff. Now, in order to make that to happen, I believe that we need very robust infrastructure, because you need data. We need to start navigating issues around data residency, data sovereignty. We need to address all these gaps and be very deterministic about them, so that it's easy for some of these guys to come into the economy or to come to the Ghana ecosystem. But from where I sit, I think that Ghana has enough fintechs to serve the needs of the people, and we need to now partner to do cross-border payment, right? Like currency-related payment. So those are the areas that I see things. I don't know what I've answered your question, but yeah, I am more in for the advancement of our domestic players. Yeah.
Okay, thank you very much, Mr. Derry Dayton. We do have a next question for Dr. Achigbe, if you're still on the call. Now the question is around, during your presentation, there was a lot of emphasis on collaboration and teamwork to help achieve scale in a global sort of space. And the question really centers around what kind of work is being done with the likes of the bill that is being drafted by the Solomon Ajay's sort of side of work, to ensure that when it does get into the right sort of approval, it's checked all the boxes to make sure that we're not going back and forth. I don't know whether you can share any light on that type of collaboration work.
Right. Well, so thank you very much. And well, thank you for today's session. I did not know this bill was in the works. It is something that is really, really, really very, very important. And I wish it's good we were hearing about it now. And I would reach out to him, Solomon, because there's some collaboration that needs to be done beyond, beyond just the startups. I see they've led it. It would be great for them to open it up for other institutions like the EMI chamber, the telecom chamber, the technology chamber, the fintech chamber, for all of us to also have some input into it. It's important. If you see the works, so it's not for nothing that Nigeria, Algeria, all of these countries are really doing great when it comes to the startups, and you see their numbers growing. The bill is really important. And if you look at, the presentation Solomon made, they tick a lot of the boxes. And, so it will be good for us to also look into it and, be able to see how we support to make that really happen. So for me, engagements like this, I come to learn. And I think for me, the jewel in one of the things I've learned is what Solomon and his team are doing. And I will definitely reach out to him after this. And just to add a bit to what Derideen said, when I hear these questions about what do we need to do to attract the PayPals and co to come into the market? I think they are the wrong questions we're asking. What do we need to do to be able to move our people to get out into, other markets? Should we really be what we're focusing on? Why should we be interested in what others are doing, not what we are doing? And I think for me, one of the places that are begging really to happen is how do we do a lot of the cross-border, especially the African payments? Why are we now, if we want to do a payment to somebody in Naira, still having to go through the dollar before we get into the Naira? So the time has come for, the fintechs in Ghana and across Africa to start looking into how we can pay ourselves without necessarily going through, another currency. And I think that is really, really very important. It's a low-hanging fruit. If AfCFTA is really going to work and work very well for us, that's one of the things that we really need to crack. And I think that we will need a fintechs collaborating, talking together with other stakeholders to really be able to make that happen.
Thank you very much, Doctor, for that answer. The word that I picked from there was that, what can we do to actually support our domestic entities to push them, for them not to ask for the likes of PayPal to come here, but actually we want to create the Cari or Dreamover equivalent that can also compete on a global stage. So thank you for that answer. Mr. Solomon, we do have a question for you. And the question is centered around the new bill. Is there going to be an incentive for companies or entrepreneurs who want to sort of go into adventures that are import substitutions? Or is there any sort of mention in the bill that is being drafted to support entrepreneurs and entities who want to venture into that space? Mr. Solomon, if you're on the call.
Yes, I'm here. Are you talking about entrepreneurs who want to go into import? I didn't get the last bit right.
Import substitution. So the things that we import a lot as a nation. So is there any sort of mention for or support for entrepreneurs and businesses that want to sort of go into that space that will create sort of domestic substitution?
Well, so fine. What the bill is focused on is companies that we call startups. Now we define startups by 2 or 3 metrics. It must be a tech-focused business or a tech-enabled business. Of course, innovation and ability to scale is the key for us and our definition for startup. And so, yes, if the startup meets this criteria, why not? You are more welcome than any other. So, I mean, it's open. It's very open. You just need to tick some of the boxes that we look for in our definition for startup. Of course, and that is a global standard. It's not just any company. It's not just any a business that you are starting. Well, it could be any business, but of course that may that may fix you into the what we call the micro, small, and of course medium scale businesses. But if you want to get a startup label, there must be an element of innovation, technology, and of course ability to scale in your business model, and these are key for us. And once you tick the boxes, why not? You are cool to go. And again, let me hit a bit on the my senior boss, Mr. Asigbe's comment. Chief, we have not engaged on the bill, unfortunately, not yet. But of course, like you said, there's a good point for us to start talking on it. So right after here, I will liaise and get to you myself and share a copy of the bill with you, so you can take a look at it and then we can start having a conversation. Of course, we've engaged to the length and breadth. We had engagement with the fintech community, led by Martin. We had a whole session with the fintech people, about I think twice. The first was at the ZPH office, and then another engagement was at the GIZ Secretariat. And so we are still engaging, and of course it would be great to engage with your end as well. I think that our last conversation was on the customized data package that we are trying to work on with MTN. That is why I reached out to you on that today, but not on the bill. So my apologies. I'll do that. I'll do the needful right away. Thank you very much, colleagues.
Well, thank you very much, Mr. Solomon. Ladies and gentlemen, that brings us to the end of the webinar series. Today, you have heard from Dr. Kenneth Ashigbe, you have heard from Mr. Solomon Ajay, and then you heard from Deredine Datsy, and then from Black Star Internal Advisory Team, you heard from Mr. Joseph Appiah. Throughout the course of the week, the first on Tuesday, we focus on asset management in the investment space and what was happening there. Wednesday was more about the banking sector. Yesterday, you heard more about the insurance space. And today, we have just gone through the fintech space, which is, positioning us for the future. We do believe in that the future is going to be predominantly driven by technology and innovation. And the guest speakers that you've heard today are predominantly at the forefront of creating that future for all of us. In terms of Black Star and what we do, we have an advisory business, which my colleague Joseph Appiah, who you heard from sort of overseas. I myself oversee the asset management side of the business, where we're involved in mutual funds. The concept of diversification is on everyone's mind, and we do allow Ghanaians to be able to get exposure across the world. And then we do have a brokerage service, which allows Ghanaians to sort of get access to anything that they want to buy, whether it be Ghana or across the world. My name is Ajay Boateng again, and you heard from my colleague, Anna Louisa Nelson. We would like to thank you all, and we will see you soon.
Yes, before you go, a quick one. Is it possible to share the slides of all the presenters to the participants, of course, all of us? Again, I also had a copy of the bill shared already with your team. Feel free, you can also share that with the participant. Of course, it's a public document. So anybody who have got input, please, we welcome your input. But kindly, if you can share the slide from the last Tuesdays on to today to all the participants, I think it would be great. So that those of us who couldn't join the previous ones can, grab it. I think that should be great. But again, Black Star, I'll engage you directly on the bill, one-on-one. Take a look at it internally, and also please make your input. And once the chance to also have a one-on-one discussion on it, I'm always available. And again, like Ken, Honorable Ken said earlier on, Dr. Ken, there is an element of collaboration. I mean, it's time we understand that we cannot do it in our silos. We need to understand the element of collaboration, innovation, and investing together for the greater impact. Thank you very much.
And that we will share that accordingly, Mr. Solomon. And we'd like to once again thank all the guest speakers today, and thank everyone who attended this webinar series. We'd like to wish you a very happy weekend. Bye-bye.